Federal Drive is presented by GEHA, Government Employees Health Association, proudly providing health and dental benefits to federal employees and their families. Visit GEHA.com.
Budget uncertainty, pay debates, and retirement delays are shaping real decisions for federal workers right now. That's affecting whether people stay, leave, or retire, and how stable the workforce feels day to day. John Hatton, Staff Vice President at NARFE, joins us to explain what's driving those challenges and what they mean for the workforce. John, thanks so much for joining me.
Thank you for having me.
As we sit and talk today, the DHS funding lapse is resolved, but we're now talking about a reconciliation process that might provide multi-year appropriations for the portions of DHS that deal with immigrations and Customs and Border Protection. What signals are you watching at this point for 2027? Are we going to go through this whole thing again in 6 months?
Maybe. I think we're grateful to see the regular appropriations process wrapped up for DHS and the rest of the bills after, a 43-day shutdown in the fall and then a 76-day shutdown of DHS that maybe was a little bit less consequential because federal employees wound up getting, many of them were paid during it. And then at some point, kind of in the middle of it, the rest of them got paid. So it was a little bit unique in that respect, but it's still good to have that stability. People may be able to order office supplies now and get back to work. I think the budget reconciliation process looks like it's moving forward. Anytime you talk about budget reconciliation, we worry about cuts to mandatory spending, but we're not seeing that in the budget resolution in terms of which committees they're directing to increase spending. One, they're directing them to increase spending, and two, they're not directing anything to the House Oversight and Government Reform Committee. But we expect that to provide some additional funding for CBP and ICE. Where things go in the rest of the fiscal year 27 appropriations process, I think the Appropriations Committee is beginning its work, starting to move some bills. We'll see how far they get through the House floor on that side. And then I would expect the Senate to work in a somewhat bipartisan fashion again. But my best guess is we're going to come into September and there's not going to be many bills passed into law. And we'll look at a continuing resolution to pass the election. And then what happens in the election will certainly determine kind of what it looks like. And then often it's, the winning party kind of sets the strategy for what goes forward.
This instability has short-term and long-term impacts, right? In the short run, agencies can't function. As you said, they can't order office supplies, they can't get to work. But in the longer term, there's a residual accumulation of concern about, am I really going to be able to hold on to this job? What is NARFE seeing in terms of retention, retirement timing, willingness to take promotions even in this kind of environment?
Yeah, well, we've seen, there's a large-scale reductions in force last year, and 285,000 or so people left. Many of those involuntary. Now, they might be described as voluntary, but if you are taking a deferred resignation program, when you saw a reduction in force coming your way, or if you took a voluntary early retirement or anything like that, because you felt you might have been involuntarily separated, then I think that's in that same rubric. But we still saw people now after December still retiring, right? There's still claims coming into OPM. They still have a big backlog of claims. Morale levels, according to outside party surveys from like Partnership for Public Service, dramatically down. And so, I think it's still too soon to say how long people are willing to hang in there, but certainly I think the calculus for federal employees has changed. It's a less secure job prospect, particularly depending on your agency. And so do you want to kind of hunker down and put all your eggs in this basket of this job, or do you want to find some more flexibility outside of the federal government? And I think that's a unfortunate consequence of a lot of these policies and the speed at which they went. I think we would love to see an appropriations process become more stable. So one, you don't have shutdowns. Two, you have some more reliability, and you have some, relative status quo stability. I mean, obviously there's changes every year, between the parties, between the executive branch and Congress about what the government's doing. I think we've had that for a while. I mean, I think we've seen it inch forward with different shutdown fights over the course of the last 10 or 20 years or so. We've seen Congress failed to pass budgets on time, and now CRs get passed even at the end of the calendar year. And all those things I think have had, disruptions for federal agencies on the federal government over time. But I think it really came to a head this last appropriations fight, when there was a 43-day government shutdown. And certainly some of it was over the Affordable Care Act premiums, but a lot of it was really over who's deciding what the government does. The administration was asserting constitutional powers of impoundment. They're trying to do rescissions with just Republicans' votes in the Senate. At the end of the day, I think it came to a place that, you need at least in this battle, you need a bipartisan Senate to pass these bills, because eventually that's what happened. They needed some Democratic votes to get these bills across the finish line in the Senate, and they had a process for the full year appropriations bills that was largely bipartisan. That type of thing provides stability for federal agencies. So there's not a huge swing based on who's in the presidency or, control of the Senate or the House. And so we hope to see that moving forward. I mean, obviously, I think every new Congress is going to come in and change priorities, and they should do that based on changing circumstances and changing values of who's elected. But having some degree of stability in this process is hopefully what we'll see. But we don't know yet.
John Hatton is Staff Vice President at the National Active and Retired Federal Employees Association, NARFE. John, getting paid at all is one problem.
Yeah.
Getting any pay raise at all is another. And the administration has not proposed a pay raise in the 2027 president's budget. What message is that sending to this workforce that is hoping for some stability?
Not a good one. So you've been asked to take on more work with less employees at these agencies pretty much across the board. And now you're not being provided a market rate pay raise. The cost of goods are obviously going up. Inflation is still at an elevated level. Obviously, oil prices are high right now. Gas prices are high. So, health insurance premiums have gone up. So you're asking people to do more and pay them essentially less on an inflation-adjusted basis. So we support FAIR Act to provide market rate federal pay increases. This isn't some massive federal pay raise. It's just, what has the private sector done in terms of average pay increases most recently? Take that number. That's what the military pay raise is. That should be a policy that keeps those pay rates and pay tables up to speed with inflation. We're not seeing that. The House Financial Services and General Government Appropriations Bill would be a bill that could carry a specific congressionally appropriated pay raise. That did not include one. There was a vote on an amendment that was defeated on a partisan basis to provide a 3.6% pay raise, 3.1 across the board, and 0.5 for locality. So I think we may still see some votes on that. There's still probably an effort in Congress to move forward to try to achieve that. Whether there can be some resolution of that at the end of the day as part of the appropriations process, we'll see. Obviously, there'll be different sides to that debate.
One of the things we don't talk about a lot with pay raises is the long-term impact. If you get a 0% pay increase in a particular year, what impact does that have for folks who are thinking about retirement where their pensions may be high 3 or high 5 dependent?
Yeah, it's certainly an impact because you're not going to have an increased high 3 for that retirement. And so particularly in those retirement years where you don't get that pay raise to match up, that's going to affect the calculation of your annuity throughout the year. I mean, it may be that if you retire now, that you at least get cost of living adjustments as opposed to the pay raise and the adjustment. So getting a cost of living adjustment, which is statutorily set and not dependent on the president or Congress to authorize every year, we'll see that annuity increase. Of course, the FERS COLA, if it's above 2%, you're not getting the exact match to the inflation number, but it's still been a little bit more consistent than the federal pay raises.
Well, as we talk about pensions, then what are the headlines regarding retirement processing? What is NARFE tracking?
Well, we're just tracking the inventories at OPM. We're tracking what we're hearing from our members in terms of how long they are experiencing delays. There's still a pretty high inventory of claims sitting at OPM of about 50,000. Now that's a slight improvement from the month before. We had heard some improvements from members where they retired essentially in July, and OPM hadn't even received their claim yet as of February. That's an extremely long time, and they don't get their interim pay from that. I've heard a few. We're still trying to piece together the information about how quickly interim pay is actually getting done. The OPM stats say 7 days. Heard a story or two about that maybe not being quite the case, but not enough to suggest that their reporting isn't accurate on the interim pay. But that that's when they get the claim. And so there's still a big delay at the agency and payroll processor side that we're concerned about, and whether that's resolved. On the OPM side of things, they still have a large inventory of claims. They're improving in terms of getting that inventory down, but it's still going to take a while. It's still going to take months. I think they're 70 or so day average now. They have some digital claims, some paper claims. They're moving faster through the digital claims. I think that shows that efforts to modernize can have an impact. So we want to see them continue down that path so that this, prepared for these situations in the future. But I think in the near term, it's just brute force needs to get through all these claims with the amount they have. Unfortunately, that's leading to impacts on things like, can a retiree just call into OPM and get somebody on the line? What we're hearing from our members is that basically it's almost impossible to do that. So you have some issue with OPM, maybe it's health benefits, maybe it's a survivor annuity, or maybe it's just finding the status of your claim and you can't get an answer. And that's very frustrating for our members and for federal retirees. I think that's because OPM is just generally overworked because of the large influx of claims. And they have probably less staff than they had last year because of the deferred resignation program. So, not a great situation. I think hopefully they just continue to plod through and make improvements, get people the money they deserve and earned as quickly as possible.
John Hatton is Staff Vice President at the National Active and Retired Federal Employees Association. John, thanks for joining me and thanks for this update.
Thank you for having me.
We'll post this interview at federalnewsnetwork.com/Federal Drive. Hear the Federal Drive on demand. Subscribe wherever you get your podcasts.